Now, there's a great question here from Trish. Will the Republicans or Democrats be better for a soft landing, or does it matter? I'm going to share a screen again, and I'm going to talk to you guys about what happened. And by the way, we can get back to US Fed and stuff, but I will jump to this because it's a good question. So what happens in election years? First off, one chart every election year since 1952, I think. So every election year since 1952, you will notice there are 3 negative election years in here. 2008 was a bad one. That was the great financial crisis. And then the other ones are largely quite positive. Red is 2024. This is an older chart, but if we extend it here, we are at about, depending on which index you look at, the S&P 500 is up, I think, about 20 or so percent this year. So we're somewhere in here. We're among the better performing years right now. So that's first off, I just want to show you most election years are quite positive. Next, I'm going to get into the historical pattern around election years to answer your question, Trish, because it largely doesn't matter who ends up winning. So at the top, you have your elections. This year, it's going to be on November 5th, and it's rebased right here in the middle to 0, to your election date, to 100, sorry. And the red lines are your Republican presidents. The blue lines are your Democrats, and the average is the gold line in between here. So I guess this chart is telling us that for the following 12 months, the market has performed better when Democrats are elected than Republicans in the year following the election. So, I mean, I guess that makes sense. They both, you could argue, someone might think this would be the opposite, right? Someone might say, well, wouldn't Republicans be better for the stock market because they're going to cut taxes and they're going to have more corporate growth? But the other argument is, Democrats are going to, fund more tax cuts. They're going to put more money in it's going to be more socialist, or they're going to spend the money a bit more, and they're going to put more money in everyone's pockets, which allows them to spend, which spurs the economy, which spurs corporations generally. So both arguments could be made. The reality of it is here, and I'm not making a statement in any way as to which way is better. I'm simply showing you the facts here. The Democrats looks like it's about a 16% forward earnings. Republicans about 6. The average is about 11. So that means we expect over the next 12 months for it to be positive. Positive, good news. This is not a time historically where the markets perform negatively unless you get a major recession again.
Yeah.
And then in Canada here,
that while the election is kind of leading up to the election, it kind of feels like people are generally don't know what's going to happen. They're a little panicky. Not much is happening. Not a lot, maybe as much trading volume, especially this time of year, that kind of situation. And then now you've got the election. Now whoever's elected is trying to make good on those promises, trying to keep their ratings up. So typically you're just going to see overall just better numbers,
positive.
Right?
Yeah. Positive. You said it. They're spending, right? They're gonna start announcing some spending. They're in a honeymoon phase. So whoever's elected is going to be like, hey, great news. We're doing this. We're doing that. We're doing this. Market's going to love it. There's also stability, right? Because now we know who's elected. Although this year, I don't know. Hopefully there's stability in the fact that there's one candidate that is clearly elected. The Electoral College has spoken out and the other candidate concedes. That would be strong. That would be a good sign for the market. If not, there may be volatility there. In Canada, the bottom chart here, it's very similar to the US. Democrats slightly outperform the Republicans in US elections. Now, sorry, I'll pause there because I want to make sure I let you speak here. It's not
so that's showing that's showing the TSX there. Okay. So that is basically showing that it's almost the exact same chart in the Canadian markets based on US election results.
Yeah, for sure. And then if I keep going here, there's a couple more things that I wanted to show. So one is the election cycle year. We have talked on this show and on this channel about election year cycles. We've talked about how the third year of an election cycle is usually a really good year. We've talked about how the fourth year in an election cycle historically is a strong year. This chart here that I'm going to show you is the S&P 500 historically election cycle versus this year. So what we're seeing is that the last 5 election years, let's go back to the last 10 or even the blue line shows every single election year cycle. So the 4th year of an election year cycle, you will notice that there's growth, right? There's growth. It's somewhat stable. You'll also notice a drop in October historically, and then a rally in November. This rally here is the seasonal pattern of the election bringing stability in November, and also coupled with the Santa Claus rally. People are just in a good mood around Christmas, so stock markets typically go up. And I do see there's more questions coming. I'll get to the questions. I'll just finish this point here. By the way, this top line here is 2024. I know we had the Chinese carry trade, unwinding of that Chinese carry trade, which was a wild month in the stock market. But look how quickly that unwound itself, Tanya.
Yeah.
That's crazy. We fell like 12% in 2 weeks, and then we gained it right back. Mm-hmm. It reminds me of COVID a little bit, right? How quickly this market reacts to news, and how quickly the markets in 2024 are quick to sort themselves out, right? It's not like if my dad were here, he'd say, back in the 80s, we had a ticker, and, we would read about the newspaper, and then we would read it on the Financial Times or Financial Post or whatever. I'm not making fun of my dad. I love my dad. I'm just, I'm making light of
but
the
everything
fact
happens quicker, right? Because of technology, and communication just is instant. And so we now have, we know exactly what happened in the Chinese markets today, last night, overnight. So it's just
before it happens.
The cycle is just
million people digesting it, million people making opinions on it, million people talking about how it's a buy now, it's a sell buy. You still get the emotions, but at least it's, it's a little different. This is a quick chart about the month by month. I think everyone knows that September, October, historically, there's been some crashes in those months. This is election year, right? This is the election year performance month by month on average during the election year. So November is historically a very strong month for election years. So that's one more thing I want to show you. Yeah, so hopefully that answered your question about the election.